Coffee with Rob. We are doing the coffee thing again, aren't we? Can't believe we've been doing this with you for a whole year. This video, I gotta wish you guys a happy new year. It's New Year time and everyone's on holiday. Everyone's having a bit of fun. Some of us are still trading, others are not. We've come a long way since that first video. That video, wow.
Which we're gonna do today. But I did also tell you it'll take me about 15 seconds to show you the system. It's all up to you at the end of the day, how many years it's going to take you to learn the patterns and the setups in the market.
And now, right up until the end with these latest videos. Hey fellow traders, it's Christmas time again. Merry Christmas to all those traders who celebrate Christmas. Those of you who don't, okay, that's fine, just bear with me. And through that time, you guys have learned to trade with price action perhaps. Some of you have been with me the whole year. Some of you have only been around for a short time and subscribed. And I really do hope we're going to have a great year together next year. And we're going to take this a step further and do so much better with everything. But it's been great having this YouTube channel for the whole year. And it's been great doing all these wonderful things that I never dreamed would have happened or done together with you guys on YouTube. I thought I was going to make one video discussing the way the markets are, and I turned out making hundreds and hundreds of videos because it became so much fun. The live show will be back on Thursday, guys. We're starting again. It's the 2nd of January. We'll hit it, we'll be on the road, and we're on it all over again. Let's get this show on the road. Hey guys, how you doing? Good to see you all again. Good to have you back. And big thing here, guys, is it's the New Year time. So my call for next year, I'm going to give you what I think, and I'm going to give you what I think the markets are going to do next year. But first, let's have a little look at what happened in the past and what my sayings have been. There was, of course, the $1 billion trading strategy. $1 billion trading strategy. How much would you pay for a trading strategy? $1 million, $1 billion, $1,000. You've been on those courses. That was a goodie. There was the courses all over again. All these courses, all these things that you do. That was good. And then you're relying solely on a system that you've paid, I don't know, how many thousands of dollars did you pay for your course? Let me know in the comments. That'll be interesting. I want to hear how much you paid for your course, because that course, great, it shows you how to trade. But guess what happens when you actually go and put real money in the stock market? And then there's all my favorite sayings. Trading is risky. And then there's the 50-50 that we always talk about. The 50-50. Sorry, I didn't mean to laugh, but that's what it's about. The thing is, guys, what you have to understand in the markets is trading is risky. Trading is insanely risky. In fact, 60 to 80% of traders lose money swing trading or position trading. Normal 4-hour daily charts. Money gone. The guys who trade 5-minute charts or 15-minute charts or 1-minute charts, guess what? Statistics show that 99% of traders lose money there. And I'm not talking about beginners, guys. I'm talking about guys who've been in the market for a long time, guys who know everything about trading, guys who know more about the terminology of trading than I do. My stuff is all free, I'm not charging you a cent, and I'm just trying to explain to you that the market is a 50-50 game. Sometimes when you take a trade, you win. And sometimes when you take a trade, well, guess what? You lose. The market's a 50-50 game. And don't forget the squiggly lines. You're not trading squiggly lines. You're trading against traders. A market is made for trading. So there's a whole bunch of traders that are buying and there's a whole bunch of traders that are selling. And they all believe they've got a system that's going to make them $1 million. And at the end of the day, all you're looking for is that liquidity in the market, which is mostly provided by the pros in the first place. So we've been through the year and we've been through all this fun. And we've done all these fine, wonderful things. But I will show you the trading strategy that I have used for over 30 years. Probably the best trading strategy ever. A strategy that will make you profitable in the markets and actually give you an edge in the markets. But What's going to happen in the new year? What's the new year going to bring us? Well, the first thing we got to do, guys, is do keep in mind that you still have to stick to the strategy. The strategy is so important. So let's go through the strategy quickly, and then I'll tell you what my call is for next year, where I think the markets are going to go next year. We're not going to go to the charts today. Today's just a fun Happy New Year video, and I'm just going to give you where I think the markets are going to go and what I think we're going to be doing next year. Now, you know, we trade everything. We trade indexes, we trade commodities, we trade Forex, we even trade crypto these days. Amazingly enough, can you imagine? We actually even trade crypto these days. But one of the most important things to keep in mind, guys, don't forget your investments. Remember, I told you guys to invest during the year, told you guys to start getting your investments going, put a little investment together, get a few shares together, and you know what? Just put a little bit of money into it every single month and watch it grow. Really, just watch it grow over the next 10 to 15 to 20 years. If you're young, you've got such an advantage. Man, if you are in your 20s or 30s and you start investing now and you just keep putting that money away every single month, whatever you can afford, and you keep buying those shares. Oh, when you get to my age, dude, you're going to remember me. I'll be gone. I'll be long gone, most likely. Well, hopefully not, but you never know. You will think of it and you will realize that if you stuck with it, how much you'll have. You won't believe what's in your bank account or what's in your investment account at the end of the day. For those of you who are older like me, or for those of you that are closer to my age, well, you've probably only got the 10 or 20 years investment left before you want to retire and that sort of thing. So get it in there, put as much as you can in. So if you can put a higher amount per month in, all the better. And as you go through your investment time, as you get on a bit older and what have you, try to add more if you're earning more. Coffee with Rob. We are doing the coffee thing again, aren't we? But anyway, guys, as I say, do add to those investments as you go. Trading strategy, quite simple. If it's the first time you're watching my video, hey, I'm Rob, and for those of you who don't know me, who do know me, welcome back. Getting that confused as well. But for those of you who don't know me, I'm going to give you the strategy that we use on a daily basis. And it's got nothing to do with the squiggly lines, as you saw earlier. It's one of my favorite sayings, don't dollar cost average down, squiggly lines 50-50. The strategy is the most important thing. And the strategy is this. Simply risk 1% on every single trade, 1% of your entire account. So if your entire account is $100,000, and really, guys, as I've said a million times, it doesn't matter what size your account is. It doesn't matter if it's $5,000, $50,000, $1 million, 1% per trade. If you want to change that percentage, that's fine. That's your rule. You know, when you watch systems online, you watch people on YouTube like me, and you watch other people, I'm sure, as well. Take the best from everyone and work out what works best for you and work out a system that works for you. So if you decide that my 1% is not good enough for you, then use 2% or use 0.5, whatever you feel comfortable with on your account. I use 1%, nice round figure. So if it's a $100,000 account, that would be $1,000 per trade. The trick is to risk the same amount on every single trade. Don't change it. Don't say, Al, I'm really good at trading the US 500, but I'm rubbish at trading the DAX. So I'm going to trade less on the DAX and more on the US 500. Don't do that. You've got to trade the same amount on every single trade. Same risk, $1,000. Now, you think, but how do I put my stop loss in? Because if I put my stop loss in, it's going to be too tight on this. No. What you do, the first thing you do, you know what your risk is. You know your risk is $1,000, right? This you know. You don't know where your stop loss is going to be yet. Now you look at the trade. Now your stop loss is where you put, where I call it an invalidation period, invalidation area. So it's an area you look at and you would say, if I walked in today and I looked at that chart, that is where I would not trade. That is a point where I would say, I'm not taking that trade. That's rubbish. That's an invalidation area. Now I'll look at that area and say, well, that's where I want my stop loss to be. Now you take the $1,000 that you want to risk and you work it back to your cost and work out what size your trade's going to be based on your risk. Your risk is $1,000. Work out the size of your trade based on your risk. Guys, this is a two-step business plan. You don't need to write it down. It's so easy. Now you know what your risk is. You know what the size of your trade is. Now you just need to know that you can make about 2 to 1 on your trade. And don't take trades that you say, well, I've got to make 2 to 1. But you know that that 2 to 1 trade is completely worth. You're never going to to reach that target, then you know that's not a good trade. Your risk to reward is wrong. If it's easy to reach that 2-to-1, then you know, okay, it's a good trade. At least if you really feel good about the trade, at least have it as a 1.5-to-1. Because the trick to it is make more on your wins and lose less on your losses. Because in all likelihood, in the market, the high probability is that if you take 10 trades, you'll lose 5 and you'll win 5. The market's a 50-50 game, as I always tell you, because there's buyers and sellers in the market, and the system and the squiggly lines doesn't make you money. It just gives you a high probability trade. Don't think because you got a high probability trade that you're now somehow going to beat the market, because anyone who told you that, talking rubbish. Doesn't work like that. What you need is to understand that you will lose half your trades, most likely. Perhaps in many cases, more than half your trades. Now, once you understand that, once you figure that out, you'll understand why you need to win more on your wins. So when your trade goes into a loss, and it goes into that, towards that $1,000 stop loss, don't dollar cost average, don't move your stop loss away, accept the fact that you're losing that trade, take the loss. Take the $1,000 loss. And if your trade goes into a win, don't go, oh, it's $300 in profit, and your fingers hovering on that sell button. Mouse, hover. Don't sell it. Don't sell it. Take your stop loss. Move it up to break even. Move it up. Trade's costing you nothing now. Trade was costing you $1,000. Now the trade's completely free. That's the strategy, guys. Now it moves up. Now you just keep on moving the stop loss up behind it. When it gets to take profit, you just take the stop loss right up behind it. It comes back and takes it out. Whoa, you made a profit. No big deal. You'll have a whole mishmash of small profits because of the system of moving your stop loss up. You'll have a whole mishmash of small losses because sometimes it'll go into a loss and you'll just say, this trade's not working out anymore, and just dump it. The same way you would have taken an early profit if you saw $300. Oh, I'll take that. No, you don't do that. If you see $300 lost and it looks pretty bad, just take that. Those are the ones you want to click out of early, not the profit ones. The profit ones you want to leave to run. That's the whole system. That's the only way that you can make profit in the markets, trading. The only other way to make profit in the market is investing. Investing is a set and forget game. In other words, I'll put my trades in forever, and one day I'll see a stock maybe doing badly, and I'll sell everything in that stock and move it into another one. And the basis of that is investing is like dollar cost averaging almost, which we are totally against. But in that scenario, it's kind of like you just keep on adding to the trades. You just keep on buying more. And over a period of many, many years, it makes a profit. But with trading, you have to use the stop loss strategy. A lot of guys will tell you, but the pros don't have stop loss. The pros don't use stop loss. You're an idiot for using stop loss. Sometimes I just give up. And sometimes I just think, are people that silly? The pros, the guys sitting in institutions, are not trading with $50 or $100 or even $1,000. The guys sitting in institutions are trading with gargantuan amounts of shares. They're trading with gargantuan amounts of money. It's not their money, it belongs to the institution. Do you honestly think that he can have a stop loss? And do you honestly think that he's trading or is he investing? Because they're not day trading. That's a huge investment. Do you honestly think that in a 5-minute time frame, they can buy the stock that they need and sell the stock that they need in that period? In all likelihood, not. Do you think that an automated stop loss or any kind of stop loss would be any use to someone with that size of trade? Because you wouldn't be able to stop it out. It'll just keep on running and looking for money to stop it out. So they trade on a completely different basis. And in fact, they move the markets with their style of trading. Sorry guys, it's Coffee with Rob again. So when these guys turn around to you and say, oh, the pros don't use stop losses. Yeah, that's because they're not trading like you. They're not a retail trader. You know, we trade with small amounts of money, small amounts of shares, and we have geared trading effectively. And yes, some of the pros have geared trading, but imagine gearing $1 million to $10 million and the amount of shares you're going to need to buy, or the amount of stock you're going to need to buy. Or imagine gearing $1,000 to $100,000 or $10,000 and how small your trade is by comparison. What we're doing is we're trading off their scraps. And the sooner you understand that, the sooner you get the picture. So when these guys tell you, oh no, the pros don't use stop loss, they're not lying to you. It's true. They're just not telling you why. I mean, just use your logic, guys. It's kind of obvious. Okay. But what's my call for next year? And what do I feel next year is going to bring us? Well, for me, things are looking very positive. Even though towards the end of last year, they did say, ooh, there might not be any more interest rate cuts. That's kind of irrelevant to the market because at the end of the day, it's all about the flow of the money and the way the money is used. And from what I can see from the last time the USA had the Republicans or Trump in charge, they did relatively well with the economy. A lot of people are looking forward to the policies. A lot of people are looking forward to the way the finances are going to be run. So what I can see and what I feel, my gut feel is that the US market is going to do pretty well. I think it should go, the index, the US 500 should most likely, in all likelihood, surpass the 6,600, perhaps even reach the 7,000 by the end of next year. That's my call. I think it's going to go up. I think it's going to do well. In between all that, there may be one or two blips or whatever you want to call it. There'll be a little bit of, downside here and there. I do believe at the beginning of the year when everybody comes back in and they think about those interest rates and all that rubbish, which kind of affects markets, they'll probably sell off a little bit, give it a little bit of relaxation, and then it'll start to go off again. And then you'll probably get the sell in May and go away, a bit of selling in May. And that's usually because of something to do with the reserves. And then it'll move through the year, and I think it will be a good year for the S&P, which means all the other markets will most likely follow. As far as the euro goes, the euro US dollar, I see them trying to fight for parity on that one. I think we're going to get a situation of a 1-to-1 for a while, and then it will go back on its normal route. And as far as the Bitcoin goes, the crypto, I'm not a big crypto fan, as you guys know, but my feeling on crypto is it'll come down a little bit, maybe back down into the 70s, and then go all the way back up to the 100,000 again and probably go through if crypto stays afloat. Right, so that's my call for the year. That's what I think is going to happen next year. I want to wish you guys all a really happy new year. I want you to come back for the live show on Thursday so we can get back on the road and get started again. I do hope we'll have some viewers. I hope we'll have somebody there because it is going to be a quiet day after New Year. But let's get the year started again. And then we'll have the next video on Friday. I'll probably go through the Bollinger Bands or something like that. We don't trade with indicators, but I've got a little series of videos here where I've done a few on those indicators. If you're interested in those indicators that we don't use, go and have a look here. Go and have a look at the last videos. I've done a few for you. Should be interesting. Thanks for watching, guys. Till next time. Cheers, thanks, and bye. Hey, don't forget to subscribe.